Well, we have the Chief Executive Officer of Center for the Promotion of Private Enterprise, Dr. Muda Yusuf, to speak to this now and tell us some of the implications of this action by JP Morgan. Good morning, Dr. Yusuf. Thank you so much for joining us.
Good morning. Good morning.
Great. So, Dr. Yusuf, what does this mean, delisting Nigeria from emerging market sovereign recommendations? What does it mean, really?
Well, I think it's about a reclassification of Nigeria within the context of credit risk rating. Because JP Morgan is like an investment advisory firm, and their index shows a rating of the performance or the credit rating of each of the bonds, especially from emerging markets, whether it is sovereign bond or corporate bond. And the issue here is that Nigeria is a paradox. A paradox because we are an oil-producing country, and at a time like this, we should be reaping a whole lot from the windfall in oil price. But the paradox is that we are not able to do that. Rather than improve our fiscal position, the higher oil price is further weakening our fiscal position. Now we are dealing with a subsidy of about $9 billion US. We have a debt service, planned debt service of about $8 billion US, out of a total revenue projected at about $20 billion US. So you can see how weak the fiscal position is. So what the index is showing us from JP Morgan is like a red flag. It's not that people will not invest in our bonds, whether corporate or sovereign. It's just to create an awareness of the level of risk. So this, our own investment now will attract investors, first, that have high appetite for risk. Secondly, it has implications for the cost of borrowing externally, either by corporates or by sovereign, in terms of the interest we'll have to pay on our bonds. So these are the implications. And all of these things are also consequences of the general macroeconomic condition. There are consequences of the challenges we have had with reforming our oil and gas sector, particularly from the point of view of the oil subsidy. And of course, the challenges around the oil theft. So these are the things. It's just a reflection of the fiscal position of governments and implication for credit rating.
So one of the concerns of JP Morgan is the intention for Eurobond, the sale of Eurobond worth $950 million. And this is coming just less than 2 months after the country raised $1.25 billion. That was in March at the cost of 8.37%. So you talked about debt servicing. You talked about the cost of borrowing that this will mean to the country. So if 2 months ago we had it at 8.75 or 73, then I wonder at what cost we are going to get this $920 billion that the country intends to go for again.
Well, the implication is that the cost will be higher, because we need to, there has to be a risk premium. Because of the fiscal position of government as a result of these issues that I've mentioned, the risk of investing will be high. And when the risk is higher, the cost of borrowing will be higher. So there has to be a risk premium. And that will mean that even now we are talking about a debt service of close to $8 billion US. That means that the debt service burden is going to increase, because given the revenue profile and the expenditure profile that we have, we are likely to see a lot more borrowing, both domestically and externally. And with this, the prevailing fiscal condition, that means that the cost of borrowing will increase. And the implication is that the debt burden is also likely to be elevated as we go forward. And unfortunately, we are not likely to see any major reforms between now and the 2023 elections because of the political dimension of the reforms, particularly around oil and gas sector. So we may have to go through this between now and the 2023 elections. So the macroeconomic implications will be very, very profound, both from the point of view of the borrowing, the debt service, the inflationary implication, and even possibly the exchange rate situation. It's going to be very, very challenging from a macroeconomic point of view.
All right, Dr. Muda Yusuf, CEO, CPPE, thank you so much for elaborating on that delisting issue. This is obviously the beginning of a conversation, and I know that we'll take it further in the nearest future. Thank you so much.
Thank you very much.